Hello traders. Today is the 17th of January 2011, and happy trading to you all. I'm looking at the Dow Jones index. Okay, this index has been quite resilient, as we were expecting. If you remember the video that we did before in the past, we were expecting this Dow Jones when it was in this region here of 61.8 to give us a healthy pullback to retest the zone of 6479. Okay, where I put my red horizontal line now. We were expecting a double bottom pattern on a weekly chart, but this index was quite resilient. Okay, we have to accept that. Okay, and it was just going up. This is what I'm talking about. After you have done your homework, there's no point to try to impose your homework on the market, but to respect the market and follow the price, the number one indicator. Okay, even though we were expecting this Dow Jones to come to the downside, we did not just impose our homework on the market. So this is what you need to do also, especially for those who are swing trading. After you have done your homework, do not try to impose your homework on the market. Okay, and now what do we look at? I'll quickly go to the yearly chart for this index. Okay, my favorite index. On this chart, you will be, this is my favorite yearly chart. Okay, if you have been following us for some time, you will know that this is my favorite yearly chart. Each candle here represents a yearly chart. This is a 2007 candle here. As you can see, this is a bearish year. Okay, if you sold it at the top here, exactly there, and just go away and come back somewhere here, you will be hugely rewarded. Okay, and then this is 2009 and 2010 and 2011 birding right here. Okay, so this is my special. So we have here, okay, 5 years altogether. And as you can see, all the gain, or since all the gain of 2007 was completely wiped out, even went below it. Okay, in the 2008 was a bearish year. That's where all the bears were dancing. I remember clearly when Dow Jones was showing a lot of weaknesses. We see a lot of aggressive bulls coming to the market and buying aggressively. We were selling, but we see the bulls coming back. We were wondering what's going on. We were selling. Everything was saying sell. You look at everything that you want to see. You observe it. It's saying sell. But there was a lot of political manipulation of the market. Okay, because of the election, all these things, they were manipulating the market big time. That the market does not fall big time. But at the end, that's what I'm saying to you. Whether there is the market manipulation or not, at the end of the day, the market will comply and rectify itself. And look at that. And because the Dow Jones during that time was overdue, even 2007 was overdue to be sold, and the people were buying. If you want to buy low, and it was, I mean, it was terrible. It was, really stressful, because we see that you can't buy. Okay, if you look at it, you cannot buy. There's nothing there to buy. But we see the market was going up. People were buying. It was madness, like Titanic. Okay, and this is what's happened, down all year long. Okay, so when the market is saying to you sell, just sell. Don't force it. Don't force it. Don't manipulate it. Don't try to control it. Especially if you're a politician, all these people control the market. Do not interfere. The market will control, will correct itself. Just let it go. If it's going down, let it go. It will come back up. It's not going to go down and stay zero. This is what a lot of people forget. The market will go up. The market will go down. If the market will go horizontal. Don't force it. Yeah, it will rectify itself. The politicians think that, oh, the market is going to crash. They're protecting their interests, controlling, manipulating the market. This talking here, this talking here, it doesn't work. It doesn't work. It does not work at all. Okay, so this is my blah 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 regarding 2011, 2008, and then 2009. The market suddenly wake up. You see, the market correct itself, and they just wake up and turn around. Okay, the reason why people bought it there, I will show you what has happened there. people look at this pattern, okay, the inverted head and shoulder pattern right there, okay. That's why people bought it there. This inverted head and shoulder on the weekly chart allow the technician to be happy to enter the market, and they bought it here, boom, up, okay, projection of the target, and they bought it. And here you see, we see the weakness here. That's where we were expecting Dow Jones to turn around, okay, because of our target being hit there, according to the inverted head and shoulder. The market did struggle here, as you can see, because the bear, we were looking for opportunity to sell around this region, and the price went a bit up only to come back down. But for one reason or another, the price did find another support here in this zone here, and it's just dragging in. But look carefully, it went above it a bit, okay. We are still in the same zone though. I don't know, the market is approaching a resistance level at where we are today in this region here, a tough resistance. You see where I put my red horizontal line on this weekly chart. But I'll go back again to my yearly chart, my special lovely yearly chart, and I'm going to draw on this chart my lovely Fibonacci tool, okay. The Fibonacci is nothing special, is to measure how much profit people have taken, okay, whether the market is cheap, oversold, or overbought or not. That's what we use it for, okay. It's nothing magic or special about it. So this is it. It's telling me that the price went from this level down to this level. I want to see how far it went up compared to how far it went down before. So from here down to here, now it's going up. We want to know how far it went up into this downtrend that was here. So right here, it went up to 76% of this downtrend up to here. The downtrend that started here down to here. Now the price is here, is 76% of that move, okay. So on this yearly chart, we are in the region, okay, because my software, this particular one, does not allow me to put the 76%. I'm estimating because we are above the 61.8, the 76% is somewhere here. So we are in the zone of 76% or 78%, like some people like to call it. Prefer now to say 76%, a Fibonacci retracement zone for the movement down from 2007 up to 2009. We are approaching the 76%. I did a lot of video which we put also on www.dayprotraders.com. I cannot stop barking about that website. If you do not know, if you don't understand, if you are not using properly the Fibonacci tool, if you are using the Fibonacci tool anyhow, go and master it at www.dayprotraders.com, okay. Now we want you to do well in your trading. That's why we put it there for you. Now the price approach is now in the zone of 76%. What does it mean? It means that is if the let's put this clearly to you in a proper English way, okay. If the economic condition is not very sound, okay, we believe that things are improving, okay. At least it has improved compared to how it was in 2008, no question about that. But how far we went, okay, how well things are now, that's what we want to know. If things has improved, okay, because we do not know everything so far, maybe there are some other things in the closet again, we don't know. But if the condition is not perfectly sound as they like us to believe, okay, we technicians have a right to look for opportunity to sell in this zone, okay. But if we want to sell in this zone, we must be very careful, because if the fundamentals is sound, the market will continue to the upside nicely, okay. They continue the movement to the upside nicely. But this is a zone where the bear will look for opportunity to sell, because it's a 76% of Fibonacci retracement level up to this level here. We will watch carefully how the market is reacting here. This is where the patience counts. You watch the price, you let the price show you the way. If it starts turning around, we will follow it. That's how you do it. For those who are using the TSTW SY08, they got the unfair advantage to time their entry point. No question about that. Okay, you can quote me on that 100 times. Okay, so we are at 76% Fibonacci retracement level of the down move up to here. The bear will look for opportunity to sell, but don't be like a robot bear. Okay, that's why I prefer always to combine the fundamental, which means we open our ears to listen to the new, to pay attention to the fundamental, check the balance sheet of the leaders, Google, Apple, ExxonMobil, okay, GE, all these big companies. We want to see Amazon, we want to check what's going on there. whether these leaders, especially the banks, okay, which we believe they should recover now, unless they are hiding some information there regarding the foreclosure and the mortgage and all the rest of it. We want to know. So we will watch carefully the banks, okay. If there are some dodgy news coming out again, then that will be a bearish party, okay. But if the fundamental is perfectly sound, the market will continue movement to the upside, okay. I'm switching back now to my I usually do a special analysis when I'm looking at this yearly chart, but I will do it in another video. I'll go now to the monthly chart, okay. So this is the monthly chart. As you can see, there was a kind of, I'll remove one of my drawing on this chart so that it's not too messy, okay. It's better now. So there was a kind of a hidden, because sometimes on the monthly chart it's not very clear as it is on the weekly chart or daily chart. There is a kind of a hidden inverted head and shoulder here. This is the left hand side shoulder, this is the right hand side shoulder, and this is the head right here. If we use this chart, okay, we do our projection according to the inverted head and shoulder projection. If the economic condition is very sound, very important, remember the if, very important. If the economic condition is very sound, if there are no bad news coming out, according to this inverted head and shoulder, the target for this Dow Jones will be in the region of 16043, 16043, okay, 16043, okay. That's nearly a 5,000 move, okay, 5,000 move for Dow Jones, okay. If the conditions are still okay, this Dow Jones can perfectly continue 5,000 more to the upside. On the top somewhere here, 160, repeat, 16043, 16043, using the target projection of the move from here where my cursor is to the neckline of the inverted head and shoulder, projection to the other side using the New York theorem, okay, so to speak, okay. We say that for every action there is an equal and opposite reaction, okay. So the movement from here, okay, up to this neckline here, we will project it to the other side, bringing us to the region of 16043. This is a pure technical analysis. We must pay attention to the fundamental. If the fundamental is sound, the Dow Jones will continue without any disturbance. Watching out, when you are going up, you must pay attention to a resistance level. There is one resistance level at 12850, okay, and another one at 13937. People tend to forget. In my humble view, okay, in my humble view, the Dow Jones will struggle to cross this level here where I'm putting my red horizontal line, 12222. Right now, even today, it's under pressure right now today. And we will watch carefully because the bear will definitely be monitoring Dow Jones in this zone, looking for opportunity to sell. If we see more excellent news coming up, then the bull will take over and control the price. In order to know when to enter the market, how to enter the market, the TSTWSY-S08 is the trading system that you must use, okay. Now going up again to the weekly chart, this is what we see on the weekly chart. This is 2009 this inverted head and shoulder again, and the price went up in this region. As you can see on the weekly chart I showed you earlier on, we are at the resistance level on the weekly chart, and where I put my red horizontal line, that's where Dow Jones it is today. Today Dow Jones will be on a serious pressure to be sold to the downside. Already we have seen a swing 240 bearish signal being given, okay. What I would say to the swing 240 traders, for those who are using the swing 240 trading system, pay attention carefully. If you are using the swing 240 trading system for the currencies, sometimes the market is going up and down, okay, because of the volatility in the market, okay. You can double your entry point time frame. So the time frame that we use for our entry point, you may double it, okay, double that time frame and enter at the double time frame, if you understand what I mean. So I don't want to reveal that on the news. So suppose our entry time frame is hourly chart, okay. So instead of entering on the hourly chart, you enter on a 2-hour chart. That's what I'm trying to say. You know exactly what to do. This is about the swing 240 trading system, because of the way the market is behaving recently. It means that you may sometimes miss excellent opportunity, which means you are entering the trade too late, okay. But to to allow you to be more patient, okay, because the market is going up and down, okay. Especially I'm saying this because of the new traders, okay. There were some tricky signal recently for the new trader. I want you to double your entry point time frame, okay. So this is about the swing 240 trading system, okay, which means you are entering the trade a bit late, okay. So you may miss half of the move, but it's to protect you, because what we want traders to do is that they are winning consistently. That's the point. That's the key. That's why we are saying that. Okay, so double your entry time frame for the swing 240 trading system, because right now there was a swing 240 trading system given on the Dow Jones right now as I'm speaking to you. Now, this is the weekly chart. That's why we see we are at the resistance level now for the Dow Jones. Okay, and there's nothing more to say, because I have to upload this currency pair, this not currency pair, this Dow Jones for the resilience have shown in the region of 61.8 here, where it was a huge selling pressure, but they survived that and went up. Unless it's a fake movement to the upside, the level we need to watch out. I'll go to the weekly chart to show you what we are looking at clearly, so we do not give wrong information here. The level we need to watch out for is this level here, 11186, 11186. As soon as Dow Jones come back and cross below 11186, that's bearish. 11186. If it come back below, which if this is the resistance it break before, if it come back and cross below it, that's bearish. Okay, but there is a one support above it, because below direct that level 10993. I hope you are following me, that I'm not saying talking too fast or confusing you here. So this is the level, okay, 111, okay, it is. And if it cross below it, we will expect it to cross below it, to go down. We will watch it carefully going down, and then come back and retest it. As soon as it retests it, boom, down. Sometimes the market may just ignore the retest and go down big time, okay. This is why it is the TSTWS1 S08 trading system is so helpful, okay. So this is regarding the Dow Jones, my favorite index, okay. I will quickly go to 10-minute chart to show you what's happening today. This is today. If we do some of the technical analysis here on this Dow Jones, this channel is clearly broken. Okay, this channel is clearly broken. There is another channel being formed here now, a bearish channel. How do I do that? I do it my own way. I do it like this. Okay, so this is another bearish channel being formed on this 10-minute chart. You see, trading is drawing. Okay, so everything is here for me now. A swing 240 trading system has given a sell signal already regarding this. We are monitoring this carefully, okay, and yeah, as soon as it come back below this channel here, the channel are excellent for momentum, okay. If that's what I say to you, you do not need any match indicator. The channel will tell you everything. That's how they build all the indicator. So now the price in the middle line of this channel. So this is a downward channel, which is kind of bearish. This one, it was rising. That's quite bullish. You see, as soon as it pop out this bullish channel here, it tried to retest it and then down to a downward channel. Okay. Now it was riding the lower part of the negative slope channel, which is extremely bullish. Now it went a bit above on the upper side of the bearish channel. A final resistance there is coming back below. As soon as it pop out here, okay, that will be another move to the downside, likely to come even up in the region of 11684. We are now at 11755. Okay, so we are watching carefully, looking for opportunity to sell big time. The way the market is behaving, especially it's Monday. What usually happen on Monday, my apology for that. I need to mention that on Monday the market sometimes try to adjust itself. That's why some professionals do not trade on Monday. They start trading on Tuesday. Okay, and because on Monday, or people wait for the week to settle, to they want, or they bring all sorts of new, they discuss all sorts of things. It's like a more debate what we're going to do this week. Okay, they look ahead, and sometimes the week will start plainly. You know directly where the week is going. So looking at the weekly chart again, okay, This is what we see now. Okay, last week was plainly bullish, perfectly beautifully bullish after this candle here, but we are at a resistance level. The professional will pay attention to that. That's why I put my red horizontal line now. So this is the question now: are we going to break it, or are we going to stay below it? Okay, the TSTW SYS08 trading system will clearly give us the entry point. I hope you enjoyed this video also, that you will put into practice in order to create the market consistently. We are the TSTW SYS08 traders. Thank you for watching, and speak to you soon.